Today in the landscape of e-commerce, having a competitive edge is such a critical issue. Why? Well, the barrier to entry into business today is less than ever because of technology and advancements and all the things that allow you to open up a products business easier than you've ever been able to do before. Well, because of that, what are the things that are necessary to have a competitive edge with your product business? Well, one of those competitive edges is your back office. How can you have a back office in a way that allows you to have a competitive edge? Hi, Vinnie Fisher here, the CEO of Fully Accountable, and I want to talk to you about e-commerce accounting, what it is, how it can offer you a competitive edge in your back office so that you can stand out and be able to compete at a level that other e-commerce companies couldn't because of that competitive edge. And so I want you to think about that, not in the way that you would historically look at your back office as a cost center, but more as a profit center. And having a competitive edge today in e-commerce is critical because the barrier to entry is so little. There are more people today than ever who are competing with you for the same consumer. Now, if you have a better product, if you have a better community, all of that is at risk because the barrier to entry is so low. So why is your back office, your accounting, such a critical component to this? And what is it? Why is e-commerce accounting so different than traditional back office work? And how is that a value to you in the way that you run your e-commerce product business? And what can you do about it so that you can succeed in a way that is far greater than any of the people you are competing with for the same customer's eyeballs? So I think that in order to have this discussion at a really high level, you have to first understand what an e-commerce accountant is. Sadly, a lot of accountants think that they can just be inside of e-commerce by treating it like another client. And that's just really not true. An e-commerce accountant is someone who actually specializes in product businesses that have a digital footprint that rely on e-commerce in the marketplace sales of the way they have business with their customers. And so that's the important part to start with right there, that an e-commerce accountant is someone who specializes not with product companies that have an e-commerce component, a significant component to their business. So here at Fully Accountable, we talk about this all the time, how what we provide is accounting and finance, real-time access to data and high transactions in e-commerce and digital-based businesses. We're not a firm that kind of works in that space. That's the only space we work in. And so what does that mean? That means that we put all of the effort, attitude, and ability only to work in e-commerce and digital. And so that gives you a competitive advantage when you have an accounting system designed and built around the marketplace of who you deal with. If you just use anyone off the shelf, you actually have a lack of expertise. What does that mean? That you have to look at how that hurts you in a competitive landscape, because with data you can be far more creative, far more capable of competing at the acquisition cost of the consumer you want to do business with. So how does e-commerce accounting differ from traditional accounting? That's a big question. And so here are some of the areas that are important to realize with that. A simple stuff about the chart of accounts, the standard chart of accounts you use within your accounting software is a big deal. And if you run that like a traditional accounting practice, your acquisition costs, your high transactions, your frequency attachment to data, all of the information you need is going to be historical. Probably not accurate, certainly not served up to you in the way that you need the data in order to make real-time, quick decisions. So e-commerce accounting is designed for high transaction businesses that have regular needs for data on a very daily basis. Traditional accounting historically relies on historical numbers, looking 45 days in arrears. That's not going to work in e-commerce and digital companies, not in this fast-paced environment. So at its first basic function, e-commerce accounting looks at stuff on a daily and weekly basis and reports information on a daily and weekly basis, where traditional accounting would look more in a 30, 45, 60-day basis. Time action set to the data. So daily and weekly is far more important than your closeouts and historical information. Okay, so why is it so important to have specialized e-com procedures? Again, one, we talked about collapsing time, getting closer to daily transactions. Because in e-commerce, there are so many transactions that happen on a daily and weekly basis that you don't want to find out that you bled to death 45 days from now. So the first and most important thing is to put daily procedures in place for cash balance management, for inventory controls, because the marketplaces that you use to sell your inventory will not tolerate you finding out too late that you run out of inventory, your cost to acquire the consumer is out of balance, and you've run out of cash. That is the first reason why time collapsing is critical in procedures of e-commerce accounting. Secondly, because of the way you buy traffic today, or the way you might acquire customers, is really a mathematical formula based off of your data. You need that data more real time to understand your acquisition costs. That wasn't always true in traditional accounting, because the traditional format that you acquired customers, you may have waited, let's just say direct mail, or even traffic channels that involve inside of stores. There's a slower reporting system to that because of the nature of how those customers might matriculate into a buying environment. That's not true of the buying environment with digital or these marketplace platforms. So allowing you to have a system set up that allows you to report data, one, more accurately, to report your chart of accounts and how you attribute income to where your costs are truly associated. But if nothing else, being able to manage your inventory more real time and understand your acquisition costs for a consumer, that is probably the foremost, most important thing when it comes to specialized procedures for e-commerce accounting. All right, well, so how do you use this idea, right? If you want better data, real data, faster, more time collapse that allows you to get closer to the customer, how do you use e-commerce accounting and reporting to better manage your online store? This is probably the next piece of it that's really important. How do you actually take this real-time data and actually make better decisions for your consumer? Well, today in a product business, having inventory cycle through and not running out is important. Let's make sure we understand that. Like today's algorithms in marketplaces do not treat you well if you run out of inventory. If you go out of stock, your rankings and what position you hold in the marketplace is going to be significantly impacted. If you don't rely on those marketplaces and you only rely on your own marketplace or your own network, and you run out of stock, well, you run the risk of losing the loyalty of the customer to a competitive product that they can have right then. So real-time order fulfillment is critical. And having e-commerce accounting and reporting that's closer in time collapsed, first and foremost, allows you to manage inventory and your buying cycles so that you never have the dreaded out of stock issue with your customers. Two, you have this requirement to probably buying customers, buying traffic, buying ad placement, being closer in time to your customer and where you're spending your hard-earned cash to acquire more customers, whether it's to initially engage them or to re-engage them, having the indicators that show profitability on your acquisition costs is a big deal. If something's not working, you don't want to find out 45 days from now. You want to know as close as possible. And one of the privileges to spending money today for ads in an environment that is all digital, you can spend a little bit of money to find out a lot of information on how to acquire a customer. And the expansion of spending money is really a privilege to scale once something's working. And so the closer you have the information in your accounting and finance to the first transaction, to the initial transactions, you'll be able to make better decisions. And finally, the last part of why you want your e-commerce accounting closer in activity is that it's not just about accounting any longer. It's about finance. Accounting is really reconciling information that's already happened. Finance is this idea of predicting or having some type of ability to use data to guess better into the future. And so here at Fully Accountable, we have e-commerce, accounting, and finance. Financing is benchmarking, budgeting, projecting, looking at your cash flow going forward on growth, how to manage inventory. So a real e-commerce accounting back office for your business is focused on accounting and finance. And finance is predictive indicators, your top 10 indicators of what you really need in order to make sure that you're making wise decisions more real time and even guessing more intelligently into the future. So what are those? We want to know your acquisition costs. We want to know your time that your inventory is going to last. We want to put some benchmarking in there that will allow us to know what your profit margin should be against industry standards, against competitors that look like you. We want to know whether you're spending the right amount of money for the inventory. We want to know if you're actually acquiring a customer once or you're re-engaging them for the same amount of money that you've paid for them the first time you acquired them, which is reoccurring revenue. We want to know about your labor costs. All of these things require finance, real-time predictive activity that allows you to have good data so that you can be more creative as the operator, as the manager of acquiring customers. If you're the chief revenue officer, then what you should have in e-commerce accounting is a back office that allows you to be more creative. If you have data, real-time, actionable in your hands, then you're more likely to be competitive in an environment where everyone's fighting for the eyeballs of their consumer. All right, so I want to wrap this up for you. E-commerce accounting can be highly competitive because it gives you a competitive advantage to acquiring customers and managing your inventory. It gives you a competitive advantage to data so that you can dream on how to acquire customers more profitably. If you like this and some of the things we have, we'd love to hear from you, what you want to hear about. Give us a comment, understand what we want to hear more about. But really, we want you winning at your back office. We want you winning and understanding that e-commerce, the accounting and finance of it, is specialized. And what got us here before is not what's going to get us into the future when it comes to this industry. Look at your e-commerce accounting as a profit center, not as a cost center, and you will see things change dramatically in your business. And if you want to learn more about us, just reach out to us, fullyaccountable.com. We can always help you answer questions. We have resources so that you can equip your back office, and we're always here to help. All right, Vinnie Fisher, on behalf of Fully Accountable, we want you to win today at e-commerce accounting. I want you to see the bigger picture of it so that you can take this into the next stage of competing and having a competitive advantage in your marketplace.